We have had very, very strong talks. We'll see where they lead. We have major points of agreement. I would say almost all points of agreement.
Stocks soaring this morning after President Trump's comments on the tarmac regarding talks with Iran. Joining us now, Mike Armstrong, president of Armstrong Advisory Group. Thanks for joining us.
Hey, good evening, Erica.
Hey, Mike, so Iran denies that there have been any direct talks with the U.S., but the president's remarks certainly were enough to really zhuzh the markets, if you will. They jumped up. The Dow did more than 1,100 points this morning before finishing the day up 631. So are we in this environment where, frankly, any word from the president that might indicate this war is going to come to an end can really boost the markets? And how rare is that?
We seem to be, and look, I know there's a fair bit of skepticism and questions about what precisely the president means, and obviously the immediate denial by Iran. But frankly, what has surprised me most about the events starting February 28th is just how much investors have been unwilling to let go of their U.S. stocks. Stocks were barely down 5% or so from the highs reached on February 27th as of last Friday. And they've just been unconcerned about where they might go.
Okay, so we know the markets, though, are responding to the war in Iran and oil prices right now. What other concerns are out there?
There's, beyond the events in Iran, there are some underlying things that have been going on, but largely investors have been extremely optimistic. I think there's the few focuses for investors as we turn into 2026, and the events in Iran were just the latest one. Private credit remains a concern. Tech valuations remain a concern. But quite honestly, this event is and should be front and center. Any expert that has looked at it has indicated that within weeks here, if the Strait of Hormuz is not navigable by the majority of ships, then there are very serious fuel shortages across Southeast Asia and even in parts of Europe potentially. You're already seeing some actions being taken by emerging economies in places like Singapore, Thailand, Pakistan to ration energy usage, and that's just not something that those economies are well prepared for.
So the basic rule of buying stocks, buy low, sell high. So that begs the question, where are you seeing opportunity for that right now?
Frankly, like I said, the lack of concern on the part of equity investors has surprised me to this point. Yes, there was a big uptick in stocks, but we were just taken back to where we were on Wednesday or Thursday of last week. And so I do think that there is a fair bit of optimism baked in by investors right now that this event is going to turn a page and that the president will negotiate something away. And I think a lot of that probably comes from the lessons over the last few years. When you think about points of market pain going back to, say, Liberation Day on tariffs of April 2025, the markets were pressured for a while, and then the president changed his mind and went in a different direction. And I think that's the lesson people are drawing upon this time. I'm unsure if it's the right lesson, given that he is not the only person in charge of these events.
Just quickly, Mike, because we're out of time. So you think the major indices might be overpriced right now?
I think that if this thing resolves itself very quickly, then no, they're perfectly appropriate. But if it drags out for several more weeks, then you could certainly make that argument.
All right, Mike Armstrong, president of Armstrong Advisory Group. Thanks, Mike.
Thank you.
Thank you.